Go. All right, we're recording, and today is Monday, May the 10th, 2021. It is a little after 5 p.m. Eastern Daylight Time, and we are gathered together for the YARcce Blockchain Self-Directed Study Group for, I forget, maybe our 6th time or something like that. I haven't quite kept count. Let me lay some ground rules with just what we'll do. And before we get to Neil, and then we'll turn over to Neil to be our presenter today. I'm going to do a little survey in a bit, my first poll. So bear with me. We'll see how well it works. We'll ask kind of, have you been here before kinds of questions. And I wanted to recap our hand signals. You ready to play hand signals again? This is the warm-up exercise. You know, you get your blood circulating, okay? Here's the hand signals. First one is get to the point. Can you do it with me? Get to the point. Okay, get to the point. Next hand signal is. I'm not paying attention to you, Steve, at all. Second one is keep it moving. Keep it moving. Keep it moving. See, get your fingers moving. Get your blood circulating. The one after that was, which one did we do next? Stop. This one. This is the one that's, oh, but let's not get into an argument or something else. Just cut it out. Stop kind of right there. That's the next hand signal.
Enough
The
is
fourth
enough.
one we added last time was bring it to a close. Just bring it to a close. You know, you kind of had your time. We're going to be brief. So, and now let's see if we can go around the room and do brief introductions. And after we do that, just so we have a sense of who's here. So kind of name, where you're from, and what your thoughts are about blockchain and related kinds of things that we're here all to learn about. So I'll start it off. My name's Ed YARcce. I'm in Allentown, Pennsylvania, which for those of you who don't know is about 90 miles due west of New York City. And I was a Vistage chair for 13 years for those of you who are Vistage chair type folk. And I'm interested in blockchain because YARcce, the group that Ron Henderson has the big logo behind him, is the not-for-profit a number of us have founded this year, including Ron and Jim and Steve, who's here. And we are looking to use blockchain technology as we grow this global virtual accelerator for environmental related technologies. That's the short speech. From there, let me toss it over to my friend Steve.
Usual. It's unbelievable. You know, Schumer's saying, "Oh, I think we've got to get crime down in this city."
Hello. Hello.
Somebody has their television or something on and we're overhearing. Steve, you're up.
What am I doing here? Why am I
introducing
here?
You're introducing yourself, Santa Claus. Steve plays Santa Claus in November and December.
Well, there's that. I mean, that's the bulk of my introduction. I'm here because Ed strong-armed me into this, and I wanted to find out all about investing through blockchain today. I'm a former VP of Finance for a professional employer organization, currently semi-retired.
Pass it on.
Oh, Mr. Henderson.
Ron, you're on mute.
Ah, there we go.
Now I'm off. Ron Henderson. I'm living in Fredericksburg, Virginia, halfway between DC and Richmond. My career was information technology and organization development for the last 25 years of it. And got tangled up in all of this because I really would like to learn how to put together an organization that is totally transparent, totally democratic, and still can function efficiently and can keep growing to any size. And that's what we're trying to do on the blockchain and with all the other automated tools. And with all of that, I will pass it to our speaker tonight, Neil.
Thanks, Ron. I'm Neil Paschall. I'm in Shaver Lake, California, which is about 6,000 feet in elevation. Yeah, I believe that that eventually Bitcoin will be characterized as the most important invention in the last 100 years. That's why I'm here. And I'll pass it off to Scott.
Scott Reeves, Northern California Chair. And I'm here to listen to Neil and see how much money he made last week. And I'll pass it on to Phil.
I'm Phil Holbert, and I'm from the Boston area. I'm a Vistage chair of about 8 or 9 years, and I'm here to learn. Boy, I think everybody's onto something. I just have no idea what it's going to look like, and I want to be prepared. Oh, I'll pass it on to Naomi.
Hey, I'm from New Zealand, a little place called Owakura in Taranaki. And my husband and I live here with our 2 children. And my husband used to be a Vistage chair, as you know. And we are currently in a time where we have a little bit of time on our hands because we work remotely in the evenings. So we have the day to ourselves. And we're looking at various opportunities that myself and my husband can put our skills to. So blockchain was on our radar for some years, actually. It's popped up at various different times. So it's come at a good time for both of us. So I'm just here to learn a little bit more about it. Thank you. And I'll pass that on to Jed.
Hello, everybody. Jed Daly, Vistage Chair, wannabe rock and roll god. I started investing in Bitcoin when one of my members sent each of us 2 cents worth and did a little presentation on it in 2016. He invested heavily and is now worth tens of millions of dollars. I put a few cents in and it's done very nicely, but is not life-changing. I'm in this mostly for to learn more about blockchain. I've been dabbling in crypto, but in investing in crypto, but I'm really interested more in blockchain and what that's going to do. And I'll give it over to my best friend, Nora.
Hey, welcome from LA. It's overcast today. Unlike yesterday, Mother's Day was nice when I had 27 people for Mother's Day. I've been hiking all last week up in Mammoth. So Neil, I got it. I understand what you're doing. And today's a day off for me on hiking. So here instead, want to know about blockchain. Delighted to learn more. Have not invested in any of it. I don't think it's about the money making. I want to know about how it's going to change the world. A little bit of money on the side would be okay. I will pass it to the new groom here.
Oh. Sorry, I guess it came to me, and I'm only speculating on that because, in fact, I am a new husband, shall we say. So this is Rick Galecki. I'm in Newport Beach, California, where it's also overcast today. And I'm particularly interested in blockchain. And I got interested a few years ago because it seems that blockchain may be the answer to holding bulletproof titles in third world countries where titles seem to be less important. And I will pass it on to Steve Brody. I don't think we've heard from you.
You haven't yet, thanks. I'm Steve Brody in Houston, a former Vistage chair and CEO coach. Would like to just deepen more of my understanding about the blockchain and investments. And, you know, the speculative nature, it was kind of interesting. Those of you may have heard some of the reports or announcement when Elon Musk was on Saturday Night Live this past weekend. And he was asked questions about, you know, Dogecoin. He was asked, is it a hustle? And he said yes. He said yes, it is a hustle. And that day the value of Dogecoin dropped over 30%. 30%. So you want to talk about speculation, that can be a little frightening as to maybe Neil can enlighten us as to where the stability will ever come from and how we get there. And let's see, who hasn't? Who should I send? Jim, have you talked yet?
Hi, everyone. Jim Medali. I'm in Colorado Springs. Today is, I think, third winter or something like that. We already had second spring and first winter and second winter. Today it's going to snow again tonight. So, and 80 on Saturday. I've been a CEO for 3 companies in plastic manufacturing. Joined YARcce as a founding member. I'm retired, and I've done a little bit of research and things in blockchain, more interested in learning more about it. I want to turn my paltry $3,000 investment into hundreds of millions. So, Neil, no pressure. And
Thanks for the challenge.
Caroline.
Afternoon from sunny Alexandria, Virginia. I'm a newbie to blockchain technology in the last 2 months, but I've been reading a lot and talking a lot about it to different people because, like Nora, I'm more intrigued about the potential of that technology for coming up with some new ways of looking at the world and resolving some of our problems. But I'm open to understanding a bit more about cryptocurrency, including Bitcoin. I have not invested. I've got a couple of ETFs in, which are dabbling in blockchain technology, but that's not the same as cryptocurrency. Kari, is it Kari?
I answer to either one, Carrie or Corey, so because it's both in my family. I'm a chair in Phoenix, Arizona, and I have been for about 14 years, and I'm just interested in learning more about cryptocurrency and the blockchain. So, and who hasn't gone? I think everybody on my screen had.
I don't think we've heard from John Walker.
John Walker.
Scott Reeves.
There.
John, your turn.
John just disappeared when we asked him. So we got everybody else? Okay, let's do a quick survey. Let's see how this works. This is a poll. And well, that's not going to work. It says you're logged on from another device and it worked a couple minutes ago and it's not showing up right now. So we'll try that another day. I don't know what doesn't work here, but it was there before I started the meeting, and I'll have to do some more homework. So let's move away from that and instead turn it over to Neil. Let me give Neil about a minute worth of kind of opening, and that in the conversation we had to set this up. Ron?
I have the poll. It's I click on your.
Can you show it?
Yep.
Okay. You show the poll. I'll admit John Walker. I don't see a poll. Is it up?
Yep.
Interesting. I don't see it.
What do you mean by SD?
Self-directed study group.
Oh.
Too long to write.
How many sessions have there been? I can't remember.
Well, probably, hopefully you can get, more than this, less than that kind of thing. Ron, I think when you signed on, you became lead. Everybody have a chance to vote?
Yep.
Ron, can you tell if they're finished? I can't see anything.
Ron, your microphone's off.
The blockchain study, self-directed study group sessions have attended, 17% of you, 2. 1 is 33%, 2 is 25%, 3 or more is 25%. Have you joined the YARcce private blockchain study group on Mighty Networks? So you have to go through YARcce to get to that. And 5 of you say no, which is 42%. 4 of you say yes, which is 33%. And yes, and I have posted comments is 25%.
Okay, thank you. Send me the results, Ron, so I can see them later on. Kind of interesting the way technology works. I was going back then to lay some groundwork for Neil. When he and I talked on the telephone to set this session up, one of the things he told me was that he has a lot of investing experience. And even in things like currency exchanges on traditional fiat currencies. So he comes into this whole process, I would say at least, and he can validate this or dissuade me of it, much better equipped than the average bear to get into things like blockchain in terms of understanding things like currencies as only one of the pieces of the blockchain. So from there, Neil, I'll turn it over to you, and I will sit back and be quiet and enjoy it.
Ed, I need to share my screen. Do you have to do anything to enable me to do that?
No, you're ready to go. You should be.
Okay, I'm going to try to figure out how to do that, and let me share with the sound.
Little green arrow on the bottom.
Yeah.
There we go.
Okay. Okay. First, a little introduction of myself. I'm a Vistage chair and formerly was a managing director with a merger and acquisition investment bank. I wasn't running a hedge fund or anything like that. I was doing mergers and acquisitions, but as a hobby, I've been trading for 25 years. You know, I traded stocks, I've day traded stock options, I've day traded futures contracts, I've day traded currency pairs. And I have to say that my familiarity with the markets and how they work was no small advantage when I got into crypto. Additionally, I took a 6-week course at MIT on cryptocurrency, and I learned an enormous amount in that course. And some of the material I'm going to share with you today comes from that course, and some comes from other research that I've been doing. And this has taken on an important portion of my life. It has engaged my imagination, and I'm really enjoying it. And it's a new era in the digital infrastructure. So let's begin. I'm going to share some information with you so you can continue your research. And if it's okay with you, Ed, I'm going to send 3 documents to you, and you can distribute those to everybody. The first one, the impact of blockchain technology on finance, a catalyst for change, a report produced by the International Center for Monetary and Banking Studies. And 2 of the authors here, Gary Gensler and Neha Nurullah, were the professors who taught the course at MIT. Neha is a PhD in computer science. She heads up the media lab at MIT, and the research work on cryptocurrencies. Gary Gensler is a former partner at Goldman Sachs and is presently the chairman of the Securities and Exchange Commission. The Securities and Exchange Commission is the lead agency in creating a regulatory framework for cryptocurrencies, and it was really great to spend that time with Mr. Gensler. This is a report that was put together by a venture capital firm that invests in DApps. And the beautiful thing about this report is it lists, maybe 100 different cryptocurrencies, and it categorizes them in separate categories. So I think you'll all really appreciate reading this report. And then this is a report done by the Commodity Futures Trading Commission here in the United States. It's very current, December of 2020. And it's just a primer on digital assets. So it's okay with you, Ed. I'm going to send these reports to you and we'll get them out to everyone. So let's start the discussion today on what is money. It's just a social construct. It's just something that we all agree to use. In the United States, we hold money in 3 different places. Currency. Obviously, if I give Ed $20, that's a private transaction between the two of us, and nobody else needs to know what that $20 was all about. It's just between Ed and I. We keep demand deposits or checking accounts, and we also keep time deposits, savings accounts. That's what really constitutes money in the United States. Turns out that demand deposits and time deposits are already kept on digital ledgers. And demand deposits and time deposits represent about 90% of all transactions. Only about 10% of transactions are handled with currency. So we already use digital ledgers. I mean, when you use a credit card, the bank basically just transfers, debits your digital ledger and credits the digital ledger of the vendor. So really interesting that we're already in 90% involved with digital ledgers. We hold money for the purpose of bridging the gap between spending and receiving more money. That's pretty obvious. What are the economics of money? Money is a medium of exchange. It gives us the ability to buy things without forcing me to trade my slingshot for your phone charger. Money is a store of value. When I put that $100 bill in the safe, I'm comfortable that it's going to, if I want to bring it out next year, I can spend it. It's going to be worth reasonably the same amount as it is today when I put it in the safe. So it's a store of value. Money is also a unit of account. We keep track of things by using money as a unit of account. We do our accounting with money as the base. Oddly enough, Bitcoin is not really a medium of exchange. You might be able to buy a Tesla with a Bitcoin, but you can't go down to the grocery store or the furniture store and buy groceries or furniture with a Bitcoin because they won't take it. Bitcoin is not a unit of account. We don't do our accounting with a Bitcoin standard. We use money, we use dollars. But Bitcoin is kind of a store of value. It's kind of like gold. You don't use gold as a medium of exchange or as a unit of account, but you use gold as a store of value as well. So Bitcoin has become known as digital gold. It's never going to be a medium of exchange because it's too slow. Bitcoin only processes about 10 to 12 transactions per second. It's unscalable, it's too slow, it has a lot of problems. It's not going to be a unit of account either, but it may very well continue to be a significant store of value because it does represent pristine collateral. And maybe we can talk about that. How does cryptocurrency reduce transaction costs? Well, it reduces the cost of verification. If you charge something on your credit card, the bank basically verifies that the transaction is equal on both sides, and the bank charges a fee for that. Verification is really important, and there are intermediaries, third-party trusted intermediaries all across the board for numerous kinds of transactions. Think of your escrow agent for the transfer of title on real estate. The escrow agent has to make sure that the transaction is equal on both sides. That's the cost of verification, and they always charge a fee. Well, with cryptocurrencies, you can eliminate the trusted third-party intermediary in many ways. And as a result, you reduce the transaction cost. Those cost reductions then can be used to incentivize the network effect. The network effect is how networks create value, and it's an unbelievable value creation mechanism. And we're going to talk a little bit more about the network effect as we get into this discussion. This top part here represents the evolution of the internet. In 1994, 26 million people involved in the internet. 5 years later, about 250 million people involved. 5 years later, about 750 million, then 1.5 billion, 2.8 billion, 4.2. By 2018, 4.2 billion people were involved with the internet. 24-year span to get from 26 million to 4.2 billion. The same thing is happening with cryptocurrencies. In 2018, there were 31 million people involved in cryptocurrencies. It is believed that by the end of this year, 2021, we'll have 250 million, 750 million, a tripling in 3 years at 2024, a doubling again in 3 years at 2027, and by 2030, another almost doubling to 2.8 billion, and by 2033, almost another doubling to 4.2 billion. Notice that the evolution of cryptocurrency is happening in 15 years. It happened in 24 years on the internet. It is unbelievable how fast this is coming on us. It is happening so fast, nobody can keep track of it. Nobody can get their heads around the entire thing, and nobody has gotten their heads around the entire thing. It is consuming in its prospects. This is a normal bell curve, representing the evolution of cryptocurrency. Back 2018, 31 million. Back here, it's just innovators involved in cryptocurrency at this point. Up to about this point, about the end of 2021, we'll be entering this phase of early adopters. Innovators first, early adopters next, representing about 13.5%. And this will take about a 5 or 6 year period for the early adopters to basically move up to 1.2 billion users. That's 6 times the users over the next 5 or 6 years. That's just users. What's going to happen to some of the cryptocurrencies is that they're going to multiply by 100x. Many of them, the ones that have great use cases and the ones that get adopted by these early adopters. Then we reach the chasm, which is sort of the sign that once you get into the mainstream market, I don't know if you can actually see that. but you get past the early adopters, you're into the mainstream market, you get another level of tremendous growth. This would take us up to almost 4 billion users, and that would put us, about to around the early 30s. So we're looking at, from this period, we're here around 2021, about 10 years to get up to here, 3.75 billion users. Amazing growth. The largest transfer of wealth in history. I'm a visual learner. And so when I saw this chart, this little hand-drawn chart, it really told me how I wanted to invest in cryptocurrencies. If you look at the way the web was developed, the initial protocol layers were basically just made available. There was a protocol layer or a rail for creating emails. There was a protocol layer for creating websites. And then these huge players like Microsoft, like Apple, like Facebook, like Google, like Amazon came along and they wrote these huge application layers and basically captured most of the value of the internet in the application layers. It's going to be different with the blockchain. In the blockchain, at the present time, privately owned companies are creating these huge protocol layers, basically, that will capture most of the value of blockchain technology and cryptocurrencies. The application layers will be apps, basically, and there will be thousands of them doing all kinds of things. There will be smart contracts, there will be decentralized applications on DeFi, there will be thousands of these application packages running on these huge protocol layers, which are like big operating systems. So when I look at that, where do I want to put my money? Well, I want to put my money where most of the value is being captured. So well, let me say something else before I go to that. The first protocol layer that was developed was Bitcoin. Bitcoin created the ability to transfer value from one person to any other person on the planet over the internet without the requirement to have a third-party intermediary involved. That's it. That's the first protocol layer. That's the first generation cryptocurrency. Ethereum then came along, and I went the wrong way. Ethereum came along as the second generation protocol. What Ethereum enabled you to do was create terms and conditions relative to the transfer of value. So I could say, I'm going to send $20 to Ed, but he's not going to get paid until he washes my car. And that sort of thing. That created an enormous amount of value. The way they do it is through smart contracts. But Ethereum was put together initially by a 19-year-old kid. You put a team together, they wrote the software, they got it out, it created an enormous value. But as it started to scale, it began to approach its technical limits. It's slow, initially processing 15 transactions per second. It's non-scalable. They're unable to scale to accommodate millions or billions of users. Ethereum is not interoperable with other cryptocurrencies, and it's not interoperable with the legacy financial institutions. Now, Ethereum has announced they're coming out with Ethereum 2.0, and they expect to have that up and running in 2 to 3 years to get around some of these issues. But hold on. But in the meantime, some other developers, including the person who was at one time the CEO of Ethereum, a man by the name of Charles Hoskinson, is creating a third generation protocol to replace or do many of the things that Ethereum does, but do them better, faster, cheaper. And so that's where I basically put together my personal investment thesis. My idea is to make concentrated bets on startups developing third generation cryptocurrency protocol layers and be patient with it. So my initial thought was put a concentrated bet, a large amount, into this kind of a company and hold it for 5 years and see what happens. I selected Cardano, which is it's a smart contract protocol that has a lot of advantages over Ethereum. And I selected VeChain, which is a protocol layer that is targeting use by large enterprises to support supply chains and transportation and logistics on a global basis. So let's talk a little bit about Cardano. Cardano has really great leadership, and they have a vision of creating a system to enable 3.3 billion people who currently are unbanked to obtain access to banking and other financial services. This is a great vision. This is a cause that will attract both customers and employees, and just terrific leadership. They've developed over 100 peer-reviewed white papers working with university scientists and the scientific method. They're using first principles to create the software. They're doing it the way it should be done, which is something that Ethereum did not do. And they're solving problems that the second generation could not solve, like scalability. Cardano will be able to scale to billions of users. Cardano is creating interoperability between a bridge between other cryptocurrencies and a bridge between cryptocurrencies and the legacy financial systems. This is extremely important. If I send you an email, you don't know what computer I'm using. You don't know what email system I'm using. All you know is you got that email, and that's all you needed to know. That's interoperability on the internet. That's what makes the internet so successful. The same thing needs to happen on cryptocurrencies, and most of the cryptocurrencies that are out there right now are not interoperable. But eventually, you're going to be able to go to a vendor and buy something and pay for it. Let's say you pay for it with ADA, and the vendor that ADA goes into the system. But let's say the vendor wants to be paid in euros. It comes out the other end to the vendor in euros, and there's a lot of interoperability involved in that. But you don't care, and neither does the vendor. You got to spend what you wanted to spend. The vendor got to receive what he wanted to receive. Very important. Additionally, the legacy financial institutions, the commercial banks and the central banks, they're not going to just roll over, and be consumed by this outside force, cryptocurrencies. What are they going to do? They're going to participate. JP Morgan Chase is currently creating their own cryptocurrency. So interoperability is a big issue. Cardano is head and shoulders above everybody else in what they're doing with interoperability. Sustainability. How do these cryptocurrencies create working capital after they spend all the money they received in their initial coin offering? Most of them don't have a plan. Cardano created a self-funded treasury system to provide ongoing working capital. Cardano is creating the ability to process 1 million transactions per second. That's unheard of. Visa can process about 25,000 transactions per second. Cardano will be able to process 1 million transactions per second. It's the most scalable system. It will be when it's finished. It's not finished yet, but it will be the most scalable system on the planet. let me just give you, this is an analyst. I just want to give you a little bit of this, not all of it, just to kind of get an insight into how other people are looking at Cardano.
We've been digging deeper into Cardano in the past month or so, and the more information we find, the more bullish we are about the future of the protocol. With so much amazing news, potential, and incredible fundamentals, Cardano seems like it could be one of the biggest cryptocurrencies in the world in the next 10 years, if it can live up to all the amazing potential it has. We strongly believe that Cardano could be heading to $10 and beyond this year, and in this video we're going to explain our rationale behind this. Well, in the past year or so since the bull run began, it's been making huge inroads with development, adoption, integrations, and future-focused upgrades, and this has been reflected in its price action. Cardano has ran from a price of around 2.5 cents in March 2020 to around $1.50 before the recent correction and consolidation period that most top cryptocurrencies experienced in the past few months. But now with the price recovering from the dip to around $1.30 and heading up, we're most likely going to continue to see great gains for Cardano this year. This means that Cardano has ran for around 60x from the lows of March to an all-time high of around $1.50, and we believe the gains are most likely only getting started for Cardano. The project has been growing at a rapid pace, and the current issues facing Ethereum are most likely bolstering their chances of shaving away smart contract platform market share, and more updates to their ecosystem coming. There's no reason to suggest that these gains for Cardano are going to end anytime soon. If you invested $10,000 into Cardano last year, you'd already be up well over $500,000. And if Cardano can continue to perform well, then millionaires will likely be made by Cardano soon. The market cap for Cardano is currently around $40 billion with a price per token of around $1.30. And it seems likely that we could reach our price target of $10 plus if the bull run continues. This would give Cardano a market cap of around $350 to $400 billion. And whilst this sounds incredibly high now, things will most likely explode to the upside with the release of their Alonzo testnet, allowing users for the first time to build and deploy dApps on their ecosystem. Cardano has already ran to such a huge market cap on speculation alone, and it seems likely once they start providing actual utility with their smart contract platform, it's very likely the huge amount of capital will start flowing into their ecosystem. Cardano's current state of network is far superior to Ethereum and will have incredibly fast and cheap transaction speeds for all projects built on it. When you look at how much potential Cardano has, it's easy to be bullish on it as the bull run progresses. When considering if Cardano can hit the $10 price target, it seems very possible when you look that this is less than a 10x from the current price. It's very likely that Bitcoin could be anywhere between a $3 to $10 trillion market cap by the end of the bull run, and with Ethereum all likely also becoming a multi-trillion-dollar asset. When you consider this and also how incredible Cardano's capabilities are, it's easy to see that Cardano could be $300 to $400 billion market cap by the end of the run, and it would not be that outrageous to predict it. Things are going to pick up for Cardano in a big way once they launch their smart contract platform, and with this there could be a big boom for Cardano approaching. With Cardano also touting their ERC20 converter, we may see a massive shift of projects over from Ethereum to escape all the issues that the platform is currently facing. If that was the case, the influx of capital for Cardano could be massive.
That's enough really of that. Let's see. I want to show you, what happened to me actually when I invested in Cardano. Let's see if I can find that here. Okay, this is the Cardano chart. So I was buying Cardano back here in late 2020.
Neil, we don't see it.
You don't see it?
No.
You don't see it?
Nope.
Hold on. Let's see. Well, I guess that part's not going to work then.
I think it's a PowerPoint slide is just the wrong one.
No, it's not. This slide isn't on PowerPoint. It's just on my screen. You know, this is my
minimize
actual account.
Just minimize PowerPoint. Maybe you see it.
I did minimize PowerPoint.
Oh.
Neil, go in and out of screen sharing. You may have to just boot it up again. Go out of screen sharing, come back in again.
Okay, let's try that. I'll try it again. Can you see it now?
Yes.
Great. Okay. So I was buying Cardano back here in late 2020, and on into early, 2021. My thought, my original theory was I'm going to invest $100,000 in Cardano and hold it for 5 years and see what happens. So I got in back here. I ended up with 580,000 ADA at an average cost of less than 20 cents. And this is what happened. It went up and it went down and it went up and it went down and it went up and it went down and it went up. So wouldn't you know it, this is today's candlestick right here. It's a red one. At the top of that candlestick, at the top of the wick, my 580,000 ADA was worth $1,050,000. At the bottom of this stick, it was worth 885,000. So that's a $160,000 swing just today. That's the roller coaster ride that you have to be willing to take if you invest in this from a long-term perspective. But I'm in it for 5 years. Those analysts that we listened to earlier basically said they thought it would go to $10 this year. That would put my account at almost 6 million. I don't actually think that's going to happen. If it goes to $5 or $6, I'll be a very happy camper, with 3 to 4 million. But maybe it will go to 10. Who knows? Nobody knows. That's who. So it's a roller coaster ride. But as you can see, the scale is headed up. So let me get back into Bitcoin to get back into PowerPoint. Hold on. There it is. Can you see PowerPoint?
Yep.
We've been digging deeper into Cardano in the...
Okay, I'm back. Okay, this is a report that was developed by the World Economic Forum on the deployment of blockchain into supply chains. This, I think, is a very good use case. I don't know if any of you have ever moved products around the world, but on both ends of the transactions, there's a number of different players who, there's customs on both ends of the transactions, there's transportation and logistics, there's currency changes, and in each situation, there are intermediaries involved. So it's very cumbersome to move around. There's a lot of intermediaries and there's a lot of transaction cost, including insurance, moving goods around the world. This report basically talks about using blockchain technology to eliminate many of those intermediaries. Well, VeChain is a blockchain-powered supply chain platform begun in 2015 and launched in June 2016. VeChain aims to use distributed governance and the Internet of Things technology to create an ecosystem which solves some of the major problems with supply chain management. In addition to supply chain management, I would add logistics and transportation. The market capitalization of supply chains is about $50 trillion. VeChain is the leading blockchain-powered platform focused on supply chains. They're in a position to capture a good part of this $50 trillion market. They're being adopted by some high-end players. You know, their current partner relationships include BMW, PricewaterhouseCoopers, Walmart, and Bayer, huge companies. So here's a little bit, here's a couple of minutes on an analyst look at VeChain.
Is 100,000 VeChain enough? Let's discuss it. It's 2021, and as we're all aware by now, the cryptocurrency space is seeing an absolutely insane influx of capital in the past year or so. Since the Bitcoin halving of 2020, the space has seen some massive... VeChain is a project that has truly massive potential in the future. VeChain is aiming to target the supply chain management industry, with the global supply chain as a whole currently being valued at around $50 trillion. VeChain has an absolutely huge amount of potential to take a good share of this market cap, which will also likely grow rapidly in the future as the global market grows. When you consider all of the components of the supply chain, it's easy to see how much utility that VeChain can provide if it aims to improve these systems that are currently in place. VeChain is a blockchain protocol that is designed to interface with and enhance the current supply chain by using blockchain technology combined with RFID tags for use in supply chain tracking. These tags, in combination with VeChain and the blockchain, can be used to track various information to do with shipments that are using VeChain, which has a massive amount of potential to improve the supply chain of any adopters of VeChain. Various information can be tracked about the suppliers being interfaced with the VeChain protocol, including geolocation, the amount, weight, and quality of the goods, and the conditions that it's being stored in, just to name a few. When you consider the amount of utility this could provide for businesses to track their supply chain, it could easily allow them to increase the efficiency of their supply chain substantially, or just improve various elements and provide utility that is not currently available. The records are stored immutably on the VeChain blockchain, meaning that the tracking information is secure and cannot be altered or incorrect. This also means that anyone using VeChain will vastly reduce the amount of human error in their supply chain, with every shipment tracked effectively and accurately on the blockchain. When you combine this utility with being able to track the conditions of produce such as food, you start to realize the utility that VeChain can truly provide. Because VeChain can monitor the conditions that food is being stored in, the inefficiencies or problems with the supply chain with food being compromised can easily be found and corrected. This could potentially save millions or billions of dollars of inefficiency in the supply chain for adopters of VeChain, which is a massive reason to be bullish on the protocol. The amount of utility and potential that VeChain has as it gets adopted by large businesses is massive, and the smart contract layer of the protocol provides further utility that can be offered. dApps, or decentralized apps, can be created that can access the data of the blockchain, and this has a large number of benefits in itself. One example of a dApp that could be created is to allow customers of restaurants to view the life cycle of the food that they're about to eat when deciding where to get food. If customers could see exactly where their food has come from, been produced, what treatment it had and received in transition, and also the quality of where it's been stored on the supply chain, this may positively influence customers to choose a vendor with this sort of transparency. Another example of a dApp may be to allow customers to view the supply chain of a given shipment before it arrives at a vendor and automatically purchase or order a product to their home without having to wait for the product to come into stock at a given vendor, such as Amazon or ASOS. This could be an incredible innovation in the future and could allow for individuals to order and get products without having to constantly monitor a store, but instead set up and execute a smart contract where the product becomes known to the VeChain supply chain tracking. In this instance, it seems likely that this would allow the user to constantly monitor the location of their product, without having to wait by the door for the postman, not knowing if their package may or may not arrive the day before the deadline. When you consider all this utility, it's easy to imagine that VeChain has an enormous amount of benefits for those adopting the protocol, and the next logical step for these sorts of innovations would be that businesses and consumers start to prefer companies that offer this sort of utility. Trustless systems are what cryptocurrency is all about, as all transactions are decentralized and available for viewing on the blockchain. The transparency and power of the blockchain is one of the greatest selling points, and offering trustless systems to other businesses and consumers would most likely lead to others preferring to work with those that have adopted VeChain. This is because with VeChain, there's a great deal of transparency and utility provided to others and allows for businesses to focus on more important things, such as improving their business, whilst also improving their supply chain and offering utility to themselves and others.
Okay, I'm going to stop it there. I think you've heard enough.
Is 100,000.
And now I just want to show you what happened to me with VChain.
Neil, we just have to be aware we're starting to lose people because we're kind of coming to the time we close. I certainly don't want to stop you, but I just want to be aware that we may need to come back to this and add to it because I think everybody's kind of fascinated. I certainly am myself.
Well, let me just skip the chart then, and let me just show you quickly some amazing things. The current financial system controlled by central banks is failing. They're unwilling to let markets self-correct. Their fear of wiping out the savings of the baby boom generation. Instead, they're just printing money, incurring massive deficit spending, creating massive amounts of debt. The governments can't go bankrupt because they print money. This is the spending power of the British pound, virtually almost by comparison down to almost zero. Blockchain technology and cryptocurrency is needed by the world economies to replace the old legacy system. Blockchain is sucking in the world's talent, financial, technology development, philosophical, economic, all migrating into blockchain. I won't spend time on the internet, on the network effect. It's powerful, but global market capitalization. This is very interesting. Gold is at 9 trillion, equities 100 trillion, debt 280 trillion, real estate 225 trillion. Crypto, 2 trillion. But here's the deal. Crypto is going to eat all this stuff. You're going to see 100x and 200x on crypto because it's going to eat all these other asset classes. We need this to replace the failing system. The relationship between risk and return is disrupted. Return significantly outpaces risk. Current investors in crypto are experiencing amazing returns due to exponential adoption. Up and down cycles, potential to double global GDP is provided by cryptocurrencies. Largest investment transfer in history. Find a use case you believe in. Make sure the crypto is being adopted by market leaders, buy the dips, and hang on. There's your strategy. Listen to this. This is unbelievable. We're going to experience the network effect in the next 5 years. Creation of digital worlds, green energy revolution, digitation of emerging markets, the internet of value, virtual reality, wearable technology, biotechnology, 3D printing, autonomous automobiles, robots, artificial intelligence, machine learning, 5G, 6G, space Wi-Fi, central bank digital currencies. All the central banks are creating their own digital currencies. We're in a transitional period like nothing we've ever seen in history. That's what's happening. That's the end of my presentation.
Wow.
You'd stop sharing, Neil. I think we'll take a couple minutes if everybody's can hang for a moment just to kind of check out all this. My head is spinning and in interesting ways from what you said. And I do think there's a lot of follow-up. I just want to point out, I said it in the chat, that Barry James on May the 20th at 1 p.m. Eastern Daylight Time will be focusing a lot on the central banks because of all of his interest and explorations there. But others, how about some quick pop-up popcorn kind of reactions? Just 30 seconds or so, your reactions to today. Anybody pop as you want to.
I think Neil makes a lot of valid points. I think that there's a lot of future in crypto.
Others?
Mind-boggling.
Yeah, Neil, I wonder when, you have any idea when the SEC is going to be actually coming out with some guidelines or, guardrails, let's say, for some of this activity?
Yeah, Steve, that's such a great question because the one thing that has prevented the institutional investors from really adopting cryptocurrencies is the lack of a regulatory framework. And now we've got Gary Gensler, the head of the Securities and Exchange Commission, and Gensler was teaching a course on cryptocurrencies at MIT, which I took an offshoot of that course. And he testified just here recently that, and he was very, very selective in his use of words, I can assure you. But he basically said that he'd like to have Congress create some legislation for Bitcoin. And he characterized Bitcoin as this new asset class. And what I interpret from that, and it's just my opinion, but what I interpret from that comment is he's saying we're not going to create a bunch of new rules and shoehorn them into the old legacy system because it would be a mess. But if we can get Congress to create legislation on a new asset class called Bitcoin, then ultimately we can fit the whole thing, the whole cryptocurrency into that new asset class regulatory framework. And I think that would be a very positive thing. So my sense is that Gensler really understands what he's doing. And I'm really hopeful that he can move it quickly, but who knows how fast you can move Congress.
Neil, a question to you. Do you hold your tokens in an exchange or in an individual wallet?
At the present time, they're in the exchange.
Okay.
That's a risk. That's one of the huge risks of this is that sometimes these exchanges get hacked. I have all of my Cardano tokens in an exchange that is on the verge of going public here in the US. Get this, Coinbase went public recently, is a US-based crypto exchange. They have 56 million accounts in Coinbase. They went public for close to 100 billion in value. That's more value than the New York Stock Exchange.
Which other exchanges would you recommend we look at?
Well, I think Coinbase would be a good one because it's now a publicly traded corporation here in the US. So, a good trail. I think that would be a good one.
Which one you said you're looking at? You're in one now that's going public. Which is that?
It's called eToro. It's based in Israel.
Okay. Did you look at, what is it, Binance or Binance? I don't know how to pronounce it.
Binance?
Binance.
Yeah, Binance, that's it.
Yeah. Well, Binance is based in Asia, and they don't have U.S. customers as U.S. accounts. They segregated into a separate unit called Binance US. And the reason is because in the Binance there are currencies that don't meet U.S. requirements, and so they split it. And they put all our U.S. customers in a separate exchange.
Neil, can I ask a question about, you imply it in your presentation, which by the way is fascinating. Thank you so much. But there's an implication that anyone of our sort of age group investing in traditional investments are possibly risking a lot as this new stuff comes online.
I'm not quite following you. What's the question now?
So those of us who have got most of our investments and savings wrapped up in fiat currencies and traditional investments, and this whole new world is exponentially growing with so many more users coming online year after year or month after month or day after day, are traditional baby boomers at risk of putting all their eggs in the traditional investment?
That's a great question. That's a great question. The central banks have refused to let those markets, those traditional markets, self-correct.
Yep.
Because they believed that if they allowed them to self-correct, that it would destroy the savings of the baby boom generation, would wipe it out. And so instead of allowing them to self-correct, they just started printing money to prop them up. That's a failed strategy. So I think what we're going to experience is the failure of the existing system gradually, and the migration onto the new system gradually. And it's going to occur over a decade or longer. But eventually, the cryptocurrency system is going to consume the existing traditional systems. Nobody really knows. I mean, that's just a guess, really.
Mm-hmm.
I don't think anybody really knows the answer.
Thank you.
I put a link up today on the Mighty Networks platform in the Bitcoin topic in our private study group, where a gentleman does a rather extended discussion and argument about how this plays out, how the blockchain attracts talent from traditional organization, because this is where it's interesting and exciting, leaves the B talent with existing organizations, and how that feeds on itself and the implications for nation states, because we're essentially looking at currencies which have been a part of the whole sovereignty issue. So expect, a lot of political struggle here. I don't think I'm going to sit by if they want to get rid of my savings and change things, only if I don't get out. If I get out and I get into Bitcoin and something else and I'm happy, then I have a different political opinion in my terms of self-interest. But expect this will create some turmoil in this next 5 or so year period as the transition goes forward. And Neil points out in his comparison to the internet that this is still at a crude level. A lot of stuff that if you go back to the days about 1990 or so with the internet, with things like Gopher, which was a search routine, and FTP for file transfer protocol, all of that was very visible and you had to know about it. Today, click, and it's taken care of. So
it's like I see Cardano as being to Ethereum the same way Google was to Yahoo. Prior to Google, Yahoo was the most prevalent search engine. As Google came along, Yahoo still exists, and I think Ethereum will still exist, but Yahoo is going to take huge market share. I'm sorry, Cardano is going to take huge market share out of Ethereum.
Hey, Neil, it's Jed calling. Jed speaking. I bought Cardano about 2 weeks ago at $1.30 on Coinbase, and I'm looking and trying to figure out how I buy VET, because that sounds like that's a pretty interesting play. But I don't seem to be able to buy it on Coinbase. Do you have any thoughts?
I do. Coinbase and VeChain have been talking for over a year. And they're very close to listing VeChain, but they're not there yet. So I bought it on Binance US.
Okay. And what do you think about buying Coinbase? I mean, that strikes me as something that the public stock, I mean, if we're anywhere near right here, it ought to explode in value as well.
I haven't really looked at that. You know, I'm moving out of stocks. So what's happening is that because of the exponential adoption of cryptocurrencies, that the relationship between risk and reward has been distorted. And the reward clearly outpaces the risk. As long as you find a use case that you really believe in, and as long as you find that the crypto is being adopted by leading organizations, if you can find those two things together, then you're going to get exponential growth. And exponential growth does not revert to the mean like traditional investments do. Traditional investments revert to the mean. Exponential growth investments revert to the exponential moving average, which means it's always going up. It's still going to go up and down. You're still going to have volatility, but it's all going to be on an upward scale, and it's going to be that way for a decade.
Neil, do you have an investment philosophy on VeChain?
Here's what I believe, Rick. I believe in the use case. You know, supply chain management, transportation and logistics management is a huge, costly problem for the globe. And VeChain has been developed as a fix on eliminating all those intermediaries that are involved in that process. And it's getting adopted by people like BMW, like PricewaterhouseCoopers, like Bayer, like Walmart. And when you see those kinds of people who are involved in supply chain management on a global scale, I mean, you got to go. I mean, you got to believe it's going to work.
So do you have a philosophy like you did for Cardano? A strategic plan, invest for 5 years, etc.?
Same thing. Same thing.
Yeah.
Hey, Neil, are you managing other people's money? It sounds like you should be.
At this point, Neil, I think we're all very impressed and ready to hand you our checkbooks.
Neil, can I ask why you did?
I've thought about it. I have done that before, but I haven't really pursued it, Jed. But I'm open. Here's the way that would work. Let me just tell you how that would work. You put your money up. You might put a pool together. Maybe you get 10 people contribute to a pool. I would manage the investment of the pool, and I'd take 20% of the profit, and 80% of the profit would go to the people who invested. That's the way it would work.
I think that's a hedge fund, isn't it?
It's like a private equity group. That's the private equity group model. That's the way it would work.
What Warren calls the 2 and 20 crowd.
Can I just ask about Coinbase, because it worries me about the vulnerability of Coinbase. And is it possible that you can have your own private wallet on Coinbase with your own keys and everything? And if I'm right, why haven't you gone down that path?
I'm not so sure. You could have. Why not use Coinbase?
Well, you're saying you're using the exchange Coinbase, right? And
no, I'm not personally using it.
Okay.
No, Caroline, he said they don't carry all of the. I think I heard Neil say that the VeChain was on Binance. That's another exchange. He said Coinbase is
No, I
not.
thought you said Kadara. You had got it from You were doing Coinbase with Kadara.
That
think-
one I think is on Coinbase, but from what I heard someone say that the VeChain,
Yeah, no. I was talking about the Kadara, and I just wondered if Neil was using Coinbase for his Kadara, and if so, why are you relying on the exchange and not, because you can establish a private wallet on Coinbase.
So I got into the El Toro exchange when I first bought Cardano back in last summer.
Okay.
And at that time, Cardano was not listed on VeChain, on Coinbase.
Coinbase, right.
And so that's where I could get it, and that's where I got it.
Okay.
I guess the question is an exchange safer than a wallet, like MetaMask wallet?
No, it's better to have it, it's safer to have it in your own wallet.
It is, so you have it in your own wallet?
At the present time, I have it at the exchange.
And I guess there's also the question, Jim, I don't know if, for example, MetaMask can handle all these other tokens, because I think it's, there may be issues there also in terms of which wallets can handle
Yeah, I
which
don't know.
particular tokens, depending which chains they're tied to. So that's another piece. Folks, we have a lot to learn here, as you can see.
Yeah, lots.
And you can see the value of this learning for us, for many of us, depending on the point in life you are when you want to be living on savings, and you listen to Neil saying, guess what, we're going to blow it all up the way you've been taught to do it. And here comes this tidal wave of stuff down the line the next 5 years. So don't go anywhere. Come back for the next sessions. This is really important. And we'll have some more conversations with Neil. This recording will go up on the YouTube channel for YARcce. I will take the stuff Neil sends me, plus whatever else we can gather together about his comments today, and put them up on the Mighty Networks platform for reference purposes and others to get there if they weren't here today. So we'll keep trying to gather some of this, and we'll continue these sessions. I'm in conversation right now with Dave Sackett about Dave doing a session toward the end of the month. And so much to continue. We have much resources, and I know we're going to all want to have Neil back again on a panel discussion with Neil and Barry and maybe a couple other people. We can hear different opinions at that point on their perceptions as we get further down the line. So those of you who've been lucky enough to be in most sessions, you know the value of what we've been learning. It's kind of fascinating. If you don't mind, I'm just going to wave goodbye because we've kind of carried on well beyond our time period, as to half a day or half an hour, and we will see you all soon. Take care.
Thanks, Ed.
Thank you, Neil.
Thank you, Neil.
Thanks, Neil.
very much.
Thank you.
Thank you.